Paul,
holding up.
Oh, I just want to say I'm back. Thank you so much for covering me.
Sure.
Me.
Okay.
Yeah. So I'll go ahead and take over from here. And is there anything else that you wanted to cover really quick?
No, just as I said, when you look at the S&Ps, one of the things I mentioned there, but I usually don't look at anything beyond a 2 hour, but I looked at this 480 minute just for perspective. And you can see here that when we rallied into Friday, we had this hanging man, and that opened the door for this lower move here. And I was already sharing that yesterday, and certainly we did go on and see this lower move, but I'm just wondering, I don't think that the equities are in bad shape, but we are starting to lose a little bit of momentum. And once again, my only concern is that the market is incredibly long dollars, and we could just see just some liquidation. Nothing huge, but that should be enough to give us a little bit of a push and maybe push us out of this tight ranges that you, me, and Stelios and a couple other people were talking about yesterday in the meeting. But I'll let you take it over from here and see what comments you have, because I know we're in these tight ranges with the market overall, and see what you want to reference to. But have a good day.
You too, Paul. Thank you very much. All right, traders, this is Blake Morrow, and you were listening to the FACE webinar, and that was Paul Franco. And just so you guys know, Dale is still out. He is. We did hear from him yesterday. We're just letting him recover because, you know, pneumonia is no laughing matter at all. You know, my wife, she had it a couple of years back, and we had to take her to the emergency room twice. And she's not a person that gets sick easily, so it definitely is something you got to monitor carefully, and you got to recover. And so he is recovering. Hopefully, he'll be back this week or possibly next Monday. I think that would be at the latest, but he might join us towards the end of the week, which would be nice, but we're letting him move at his own pace. So for that reason, I'm covering here for him, and then we obviously have Steven Stelios coming in as well. Now we've seen a lot of movements in the FX space over the last 24 hours. The first one, the reason why you saw the dollar yen sell off here is this was in response to the new round of tariffs that the U.S. is imposing on China. One of the reasons, well, one of the things that turned the dollar yen higher is that and Japan actually announced that they're going to initiate and start bilateral agreements or trade talks, excuse me, with the U.S. That moved the dollar yen higher, and then we saw the spike in in European trade, early European trade. We saw the U.S. dollar Japanese yen take out the stops above this 112.20 level, which, you know, that whacked the stops, and now we're just, you know, we're back testing those areas, but are we going to be able to continue to push higher? I'm really not too sure. I think the market, you can tell this is a stop loss run. I mean, we rallied above 112.20 and then slammed all the way back down to 111.80 and change, and then, you know, we've obviously bounced back as U.S. traders have just been stepping into the fold. I'm unsure what to do with like the dollar yen right at this moment, and all these other yen pairs, because you can see that the euro yen, for example, broke the 200-day moving average, but we are, you know, struggling to build on those gains, because what happened is we had that rally, that squeeze, then we're right over here. You know, we're right back below or right at the breakout point, and I think a move below 130.50 would signal that we are going to make a move lower in the euro yen, and then that would just, you know, for me, cement the idea that this was just a short squeeze, just got all the shorts out, and then we start moving lower. But I think that's going to have to move with equities, and right now equities, they're strong. I mean, we've bounced back. In the S&P, you can see this is a 4 hour chart. We've bounced back. We are now, if you just take a as Paul was doing, and I'm gonna give you a little bit longer term perspective of the S&P right now. We're actually making lower highs. Yesterday's move cemented the idea that we're making lower highs at this point. Now we're not making lower lows, but in the event at this stage in the game, in the event that you break below 2860, that is a near-term change in trend. So if you got the S&P here, you got high, lower high, you've got a low. In the event that we come back and we break through these lows, now we have lower highs and lower lows that will eventually potentially lead us to a little bit more of a down move, I guess is what I'm trying to say. But we haven't broken that series of lower high or lower lows just yet, not yet. But it's now becoming a risk. The trade war is intensifying, any which way you slice it. And like I said, I was talking I was talking to a friend of mine, and a really great trader, and he was just like, yeah, China could try to stimulate their economy, but remember, their economy is actually the economic data for China is already in a weakened state, so they may try to do some sort of stimulus measures, but are they going to retaliate? And I think if they do retaliate, then that's going to give us a new leg lower in the S&P, and that's what's going to put us, at the support, if not lower. And that's something that I think is a risk for the stock market. Now, the question that we have as currency traders is, what's the response? And how does the market respond? I mean, the euro. I mean, look at this. Look at the whipping around we're seeing in the euro dollar, for example. I mean, we were just trading at 116.80, then we traded up to 117, almost 117.10, right back down to 116.90. It's extremely volatile right now in the currency market, and you have to be a little careful trying to chase, because the euro, if you ask me, is actually consolidating in this range. I know Paulie said that that the dollar looks weak, and I would agree with that if the euro takes out these highs. We have this downtrend line right here that you can see, this false breakout right there, potentially another false breakout, and that's why that I think we have to be a little careful while we're trading around this 117 level. And obviously, and I'm just going to point out, I'll be Captain Obvious right now. Obviously, a move below, let me draw that out a little bit better. A move below like 116.50, that's going to be a pretty negative event for the euro. Are we going to get there? Are we going to break it? I don't know. I think you have to, at this point, you have to let the market show its itself, rather, or show its its intentions, rather than assuming which way it's going to go. So I guess we can say above 117.30 is bullish, and below 116.50 is bearish, and until we make a break one way or the other, you have to be really careful. And I think that's just the fact of the matter right now. We're wedging really tight, and a breakout is probably imminent. And heaven forbid you're stuck on the wrong side of a breakout too. You know what I mean? So I think you got to just let the market do what it's going to do versus you making an assumption what it's going to do. The pound, Paulie made a really great call yesterday at it's 117, or I'm sorry, 131.70, and we are kind of in between fibs here, but you can see how we're holding this uptrend line, very minor, but I think a break below 131 would probably signal that we're seeing a near-term reversal in the cable. So we just got to pay kind of close attention to that. And speaking of, actually, if you want to just dismiss like a lot of the dollar pairs, if you go look at the euro pound, we are bouncing actually off a pretty key support. And if you break below, and I have this drawn out, this arrow here, because if you drop below this 161% extension, you're breaking this uptrend line too. But you know, we are actually respecting it right now, which you need to think about that too, is if you are long the pound. If you're long the pound and you got the euro pound that's bouncing, if we get a more significant bounce in the euro pound, that is going to weigh on the cable, so to speak. So just something that I think everybody should be paying attention to if you're dealing with the pound dollar at the moment. You know, I was going to take a real quick look, and I know Steve probably wants to look at this with Stelios as well, but I got to look at it too. There's gold, and here's silver. I mean, it's hard for me to see, for me to be really bullish gold and really bullish silver. But until we break above, like in this case, gold has to get above 1215. Silver has to get above, you know, 1435, and then at that point I'm going to be extremely bullish gold and silver. But I'm saying this because this is what's really going to turn me bearish the dollar. This is what, if I see gold and silver break higher, and that's really what's going to show me the way. It's not, you know, because it might not be so obvious when you're looking at the dollars. With the dollar pairs, it may be more obvious if you're just looking at precious metals, and then precious metals make the move, and that will give you the confidence that the dollar is going to move one way or the other. You know, and in this case, I'd have to see silver and gold actually break out to the upside before getting really, you know, bearish the dollar, you know, or in other words, long the euro or long the cable or maybe long the Aussie, that type of thing. One of the other things that Polly pointed out this morning, early on, like, you know, about an hour ago, is about how the Aussie is actually outperforming right now. And the Aussie is actually outperforming despite this ongoing trade war that we have with China, and that is significant. You know, what is that telling us? You know, is it telling us that we should be long Aussies? I don't know if being long the Aussie is necessarily the right trade, but it is something that you kind of got to keep in your in the back of your mind right now, that the Aussie is actually doing a little bit better. In the event that risk appetite continues to improve, or maybe there's some improvement between China and U.S., that that the trade war doesn't escalate from here. If it doesn't, you know, maybe the Aussie is, you know, the better play to the long side. And it doesn't necessarily mean you have to buy the Aussie dollar. It might be, you know, shorting the euro Aussie or shorting the pound Aussie. This way you're playing the Aussie dollar, but you're doing it on a cross rate, or maybe even buying the Aussie yen. So those are things that I think that we should be, you know, thinking about moving forward, just because the Aussie is doing a little bit better at this point in time. Doesn't mean it's gonna sustain, but it is something that's an observation that's worth noting, in my opinion. Okay, and what else I want to go over? Oh, the dollar Swiss. The dollar Swiss is at this major confluence here. I actually picked up some dollar Swiss this morning because, you know, I've got a long pattern in play actually, and so I played it long yesterday, made a little bit of money. I played it. I'm buying it again down here. We hit the 161% extension of this range. It's also at a big long-term 50% retracement, and if we get above 96.30, it's going to break higher, in my opinion. And with the dollar yen moving higher, and with yields moving higher, I think it's possible that the dollar Swiss actually, you know, gets some sort of bounce. And this is where we get those mixed signals on, okay, are we going long the dollar, or are we going short the dollar? Because there may be some dollar pairs that perform better than others, like the dollar yen and maybe the dollar Swiss versus you know, the euro or the pound. So those are just other things to just just to keep in mind as you're trying to navigate through this very difficult market. With that being said, I'm going to pass everything over to my colleagues Steve and Stelios. Guys, are you here?
Hello, hello.
No,
Hey, good morning. Actually, before I pass it over to you guys, I need to mention that our offer is live on ForexAnalytix, and let me explain to you guys how this works. The ForexAnalytix, we have a subscription offer that we do maybe once a year, and we only do it for a week or two. In this case, it's going to go all the way to the end of this month, so it's going to be all the way till September 30th. As October 1st, we will shut it down, as we always do. It's a very special offer because it's a buy 1 month, get 1 month free, or you buy 4 months, get 2 free, so it's a semi-annual subscription, or buy 8 months and you get 4 months free, which is basically an annual subscription. It's the best deal that we offer, and we don't extend the offer, we just shut it down, and then you guys can't get it for another year or whatever. So if you want to be part of the ForexAnalytix community, make sure you take advantage of it. And also I need to mention that Paul Franco's webinar that you guys are listening to, the European crossover right now, it is a free webinar until the end of this month. And the end of this month, it will be a subscription only webinar. So if you want to get the morning analysis from Paul Franco, only people in the ForexAnalytix community are going to be able to get that. And because Paul is really good at reading price action, and we want to make it exclusive for our subscribers. So so that's all I wanted to mention about that. And make sure that you visit Forest Park FX. I don't know if you guys don't get some sort of rebates in your trading, why you wouldn't. So talk to them, and you can get to them right from our reimbursement program link. They are our sponsor of this webinar. That you get this free webinar because of them. So make sure you go down and visit them right here. They have the email address and Skype account where you can contact them directly and kind of see what your options are for your the type of trading that you do. So guys and gals, make sure you sign up for the new seasonal offer. And Steve, Stelios, it's all yours.
Thank you, Blake. I am going to take over because Steve is restarting his router or something. And, yeah, the usual problems. It's okay.
Passing it over to you, man.
Sure.
All right. You guys have a good one, and have a great day of trading.
Thank you, Blake. See you later,
Thanks,
mate.
guys. Bye-bye.
So, a couple of things I wanted to mention before we start. First of all, if you don't mind, Steve. First of all, the Trump and the US tariffs on China. There is a little detail which I don't think we mentioned, is that Trump has actually said or hinted that there are more tariffs to come if the Chinese retaliate. So if they retaliate with any kind of measures or anything like that, I remember reading that there was around 260 or something like that billion of extra tariffs. So that's the thing to keep a note of, because not only is he introducing tariffs, but he's kind of threatening, if you do something in return, then I'm going to just increase them. So that's one thing. The other thing which I find once again surprising is that equities don't care about anything. I'm sure you guys, I think Paul
US equities.
US equities, yes. And it's like you have this thing, over our heads, waiting to see what's going to happen, and US equities are happily green again today. So this is something that I don't get. I'm not short equities, but I'm not long either. So I'm just watching them with interest. And the other thing I want to mention, actually, which is I think the funny thing of the day, is that the Kingdom of Saudi Arabia said that they are they are actually comfortable with prices above $80 per barrel for crude.
Why wouldn't they be?
Yeah, I was thinking, okay, give me one scenario where they're not comfortable. They're producers, they're the biggest producers. So I read that and I chuckled. But yeah, I mean, they're gonna say that they have a vested interest for prices to be high. Their product is finite. Eventually, it's going to be over, so they probably want to sell it for the best possible price.
As every employee is comfortable with getting a raise. I haven't heard anybody complain about it.
Yeah, exactly. So, otherwise, not much happened, overnight. I mean, obviously the Trump story and the tariffs is the main thing, and we wait to see what's going to happen with that. And NAFTA, we had nothing from there. Brexit, nothing there. Nothing from Italy. So, the world is good otherwise, apparently. And
Indeed,
that's that's pretty much it from my side.
Okay, great. You can pass me the screen so we can have a look at a few technicals. Obviously, not much has been happening. We've been so far after returning from summer trading, we've had more or less very tedious market conditions. Like it or not, it is what it is. My prediction is that this is not something that's going to go on for much longer. I expect that sooner rather than later, this is going to change, and I think we're going to get some volatility and some good volumes, and usually those two bring with them technical clarity. Now, there are a few things that I feel stronger about. Let me start by saying I was mentioning that since last week that I think that the USD yen is going to break higher, and I said yesterday specifically that I believe that we have extra evidence for that due to the fact that finally we got, let me switch to it, we finally got the Nikkei breaking out from the 23,000 level, and actually the Nikkei earlier today even gave, during the Asian session, even gave people the opportunity to join in at a very good price, because it came down. It was negative at some point during the night, and it came down and retested this breakout horizontal support resistance area at 23,000. It actually went to 23,050, but as always, I mark areas, not a specific level. And as you see, it accelerated higher following that. So I do believe that this is, I had been saying that any breakout either from 22,000 or 23,000 should be respected. We're seeing this upside. Just look at the momentum we've had since we found this low here in what was it, like 19th of September? 7th of September. Yeah, and we've had like a very, very healthy move to the upside. As I said, we even now retested the breakout area. So I think that we're on our way to 24,185, which was the high, and we take it from there. Very likely a new high from there. So the Nikkei and the US equities don't seem to care that much about anything else. Now, oppositely, from what happens to other indices, although Stelios, since you mentioned the Shanghai Composite Index like a few days ago, and we were looking at this potential of a descending wedge, I have to say that we got a very nice bullish engulfing overnight, and quite a nice reaction. Not exactly what somebody would be expecting following the news about the confirmation about the tariffs. We're also seeing some very nice RSI divergence on the daily chart, because the higher the time frame, the more reliable the signal. So as you see, quite a nice divergence as well in the RSI. So I have to say that even if we have a look at the Shanghai Composite Index, there is a decent potential for a rebound from here. Obviously, the Nasdaq has had a very negative day. I scalped some of it yesterday, which isn't my style, but after getting that kind of a candle, I was just 1/4 of a position short. I took it out because I still don't trust these markets. So that was some fast, easy profit, and I just took it out of the market because the S&P still looks to me like it's consolidating. Just looking at the S&P, which anyhow is the risk barometer having to do with especially US stocks, it doesn't look bearish to me yet. And today's hammer is a testament to that. I would at least need to see a break below 28.62.63 to expect a deeper pullback, perhaps towards this ascending channel support. For the time being, we have to respect the fact that we are in an uptrend. Now, having to do with euro and crude and how do I connect them? I do and I don't at the same time. I see an inverted head and shoulders here potential for the euro USD. I've said plenty of times, I do believe that the vast majority of the chances are that we're going to, in the short term, break higher. I would want to see this 50% fib at 1930. The 200 DMA is just above that and converging to that level. I would want to see it getting retested. So in the short term, I'm still looking, for higher prices in the euro USD. Of course, there's no guarantee. We need to see a breakout from this, like roughly 117 area, a daily close above this 117 area. And at the same time, crude is doing its best. You mentioned what was the trigger, Stelio, a statement that has no value at all, because the market rallying on a statement that Saudi Arabia would be okay with higher prices. As I said, it's like stating the obvious. It's like saying that the sun is hot. Regardless, I do see this as a potential in inverted head and shoulders formation as well. I mean, you can see it quite clearly here. And, since I still maintain my medium to long-term bullish bias, as I was saying, I do see a potential for one more leg lower. But one thing is for sure, if we finally break above this high, I then think that this probability goes out of the window, and we have more or less a confirmation that the uptrend has resumed, in which case this very nice inverted head and shoulders formation, having broken the neckline, once that happens, once we see daily close above the 61.8, just above 71, I think that's going to be pointing to new highs. My next target would probably be the 61.8% fib of the big bearish move that we had until we actually found that low, roughly at 25, whatever it was, which comes at 76.50. So, that's where I have my eyes at the moment. 70, 71, quite a strong resistance area. Actually, we haven't managed to close on a daily closing basis above the 70 resistance area. It's a little area like 30, 40 cents. So, I want to see, first of all, that happening. And, once that happens, then I'm going to be looking for more upside. And I might actually even buy crude. So, this is something that if it happens, if we see euro, finally closing above 117, if we see crude finally closing above 70, even preferably above 71, I think that at the same time we should be seeing, and I'm more or less saying that the opposite thing than Blake was saying. I mean, no, sorry, it's not the opposite. It's actually the same thing, but I'm reversing a little bit the order. I mean, Blake said I want to see gold, move higher, break higher. What I'm saying is that I believe that euro and crude might actually be the ones driving the move. It might be gold, who knows? But probably, when one of them at least starts breaking out, I think that the rest of them will do. Now, I don't know if it's going to be euro USD first, very likely in my opinion. I don't know if it's going to be gold. I don't know if it's going to be crude. But in my opinion, those things should happen in sequence or concurrently, but very close to each other. So, these are the markets I'm actually monitoring for some kind of confirmation that, we are headed higher and that the dollar is actually headed lower, which, from a technical perspective, looks very likely to me. Let's switch back to the dollar. Dollar, as you see, like barely holding, but it's definitely very heavy, right? Definitely very heavy. And also, and not surprisingly, we see something like an inverted head and shoulders formation in the euro, like a head and shoulders formation in the DXY. So all of them should happen more or less at the same time, and this is what I'm monitoring. And I do believe that once we get that ball rolling, I do believe that we're going to get some more clarity and some better and cleaner moves in the markets, or at least That's what I'm hoping for. And I really don't believe that we're going to easily finish September in the same manner that we've actually gone through it. I mean, having choppy, tedious markets. I do believe that, the market is going to start moving. Now, I don't know if there's going to be some kind of a catalyst first. Obviously, the extra sanctions didn't end up providing that catalyst for the time being, but it might be something else. Sometimes it's nothing at all. It's just, the market just decides that, okay, it's time, to get rolling. And, that's when it starts happening. Now, having to do with some of the yen, okay, first let me go through some of the commodity currencies. I have to say that, the Aussie is making a decent attempt to reverse, but, it still remains within this descending channel. So it has, room to go, but you don't even need to go down to a 4-hour chart. You can see that this also looks like an inverted head and shoulders formation. I mean, little shoulder here, head, little shoulder there. So, and the same thing applies to Aussie yen, actually. Let's have a look at the Aussie yen. There you go. Shoulder, head, shoulder, Aussie yen, after a very unimpressive breakdown. I mean, we broke down from this consolidation, but the downside momentum was very, very unimpressive, and this is something that was actually troubling me. Actually, I worked with a fund. They asked me about the Aussie yen some time ago. I said that because they had a recommendation to sell it. Actually, I said that listen, I have no argument against selling it, but on the other hand, I'm not really enthusiastic about the way it's moving lower. I would want to see something more impulsive. On the other hand, the Kiwi yen actually is threatening with a double bottom, right? Because we retested this confluence of supports at 72.37, and we're rebounding again from there. For me, critical level is here, the 74.30, previous low 50, the 50 DMA is also there. A little bit higher, we have the descending. You can see this descending channel. It's been going on for quite some time. So, for the time being, the commodity currencies look more or less better than the rest, in the short term. So, I'm monitoring that as well. They need to do more, to actually prove that something is happening, because yes, they are rebounding, but have they actually cleared yet any of the strong levels you would want to see before you can actually, call this like a reversal? Not yet, but they do show some potential. So there is also a couple of more things I wanted to show before we go through questions. Euro yen actually overnight tested quite a nice area of resistance, previous support. You can see it here. I was looking for resistance either in this zone or a little bit higher at the 61.8. If we get a rejection, in either of those levels, I'm going to feel good about, a move lower, a resumption of the move lower. But to be honest, I don't see yet. I mean, we did stall a little bit overnight there, but I don't yet see the signs, that of a reversal. As I said, those are levels of interest. So, we might get something manifesting, but, just by going through the two currency pairs that we can build the synthetic euro yen from, I mean, the euro USD and the USD yen, neither of those two, I mean, if I had to do something with them, I would buy actually both of them in the short term. So, having said that, this is a key technical level, but do I really feel that it's going to do something? No, actually, not really. So, I'm monitoring this level, but I'm going to be a little bit surprised if it acts as resistance already. Same thing with the pound yen here. I mean, we're retesting this 147.50 area. Initially, I was expecting this level actually to, after we tested, because that's exactly what I was looking for, like an ABC. I was expecting that after we retested this level, the pair might fail, and it still might do. I mean, we're exactly here. But, the cable is still in corrective mode. The USD yen has broken higher. So, you know, I'm a little bit skeptical. Let's see what's going to happen. Definitely, I wouldn't be buying it right on resistance. That one thing is certain. So, you know, important level. I'm really looking forward to see how the end of the day candle is going to look like. And, you know, we can discuss about that tomorrow once again. Now, let's have a look at the crosses, and then we can go through some of the questions, because yesterday I didn't actually do that, the pound Aussie and the pound Kiwi. And one of the reasons it's important to do that today is because so far today, for example, the pound Aussie is threatening with a key reversal, right? We actually pushed to new highs, and now we're reversing, and we are actually threatening of closing below yesterday's low. So far, quite a bearish candle. Of course, we need to wait for the daily close. We had already started seeing strong signs of bullish momentum loss. So the bullish momentum was waning. But today's, you know, today here is the pound Kiwi as well. Not a key reversal, but already an outside day. You know, looks to me more like a bullish consolidation if we actually close near the highs. But if we actually push and close at the lows, you know, that's going to be a little bit of a warning signal. Pound Aussie looks better if you want to trade the reversal in comparison to pound Kiwi. There's no question about it. The reason is that for the time being, the Aussie Kiwi is actually managing to hold the ascending channel. Let me show you before we go to the equivalent euro crosses. So, you know, we had a big outside bullish candle in the Aussie Kiwi overnight. As you can see, we held this channel support once again. So as long as we hold this channel, there is always the chance. I mean, we should respect the possibility that the Aussie is going to overperform the Kiwi. So let's have a look at the Euro Aussie and the Euro Kiwi. So here it is, so far a spinning top, more or less a candle that shows indecision. You know, I have to remain bullish as long as we're staying above 161.50. Okay, so 161.50 remains, you know, a key level. And, you know, Euro Kiwi, probably the most bullish of those pairs. I mean, from the Euro and pound crosses. Simply put, this looks like a short-term flag, pennant, you can call it whatever you want. So, you know, if you want to be long one of them, I think that Euro Kiwi looks the best. The next upside target I would be looking for would be the 161.8% extension of this corrective move lower, which comes at 180.73. I think that it's quite likely that we are going to tag that level. So let's see, Stelio.
Yes.
Do we have
actually,
any questions?
We have one from our friend Costas, who's actually, he's saying, have a look at copper because it's breaking out, has a big engulfing candle.
Oh yeah, thank you for reminding me. I was looking at it earlier. Copper, an amazing head fake. Yesterday, after the announcement of the news, I was actually one of the first things I looked at in my screens was copper, because copper was actually, as you see, threatening with a breakdown from this triangle. It was pushing the lows, and I was thinking to myself that, you know, if we actually get some follow through from that, you know, we are really on our way to the next target, which is roughly at 243. And, you know, now it has completely reversed course. We're trading at the highs, and we seem to be breaking out from this descending trend line resistance. So we were actually threatening with a breakdown, and now we're threatening with a break higher. Now, what would I need to confirm? A daily close above 273. If we do see a daily close above 273, I think that's going to be a nice head fake, and I think we're on our way to 294. Okay, which was a breakdown level of the double top. So copper is quite interesting. I think it might have trapped a lot of people in the wrong side of the market overnight. And, you know, if we close above that level that I said, 274, I think that the market can easily move another 20 cents to the upside and perhaps some of the weak bears will actually fuel the rally themselves. Any other questions, Dale?
Let me have a look. We have Sterling Swissy. Do you feel like having a look at that?
Sure, absolutely. Why not? I don't even remember when was the last time I looked at it, but yeah. As it seems, it wasn't that long ago. Okay, this is a very bearish breakdown, and you can see why. Right? Because let me put it on auto so you can see strong move lower, a move that has 100% corrective characteristics. It's exactly what we would expect. I mean, overlapping, choppy, slow, took a long time to retrace, like a little bit more than 50%. We even got this little nice overthrow, which I bet got a lot of people trapped in the wrong direction. And then we reversed and finally broke below this channel. So, I think it doesn't look good at all. In the short term, it looks like it might want to post like an inverted head and shoulders formation, but we definitely need a break above 127.30 to confirm. In which case we might get like a stronger rebound. But in any case, I would be looking to sell, rebounds and not the opposite, right? Because this is a very bearish development. So, as I said, rebound might actually extend even towards 128.30, 127.20, 127.30, strong resistance. If we break above that, we might extend higher towards 128.30 to 123.60. This zone, but I do think it's a pair that should be sold on rallies and not the opposite. Let's have a look at pound CAD, and because I forgot to mention those, and Euro CAD as well. Pound CAD pushing higher, currently testing almost a confluence of resistances. I mean, the descending channel is a little bit higher, but we're definitely now testing horizontal support resistance area. So quite a key area here. I would be very closely monitoring it. If we do break above this area, I do believe that we should see more upside. And let's have a look at the EuroCAD as well. There it is, EuroCAD. As you see, got rejected from this confluence of resistances, the 200 daily moving average, and this horizontal support resistance area. But for the time being, I don't have anything against seeing a stronger rebound. Most probably, I would expect something like this to unfold. So I would expect at least one more leg to the upside. Okay, to play out here. Now let me mention USD NOK, because actually USD NOK did break down below the 820 area. So I do believe that this is a more complex move to the downside, in which case I would be looking for 820 to act as resistance from this point on. So bottom line, I don't think that the move lower is done with USD NOK, and I do believe that selling a rally to 820 or perhaps even to 831 at the worst case scenario here, these lows that were formed at 831 roughly, is the best way to go. Doesn't look like the USD NOK is ready to break out from that long-term formation that I was also showing yesterday once again on the weekly chart. So we should probably be looking to sell rallies from this point on. I don't believe that it's going to completely break down, because as I was showing, this is a longer term consolidation. So it has more room to move to the downside if it needs, but I really don't see yet the technical elements of like a big breakdown, but it definitely has more room to move lower. So Stelio, is there any new question that has come up? Otherwise, we can just wrap it up.
Yes. Yeah, maybe. Okay, we have one more question. Our friend Chetan is asking for the Dow, Nasdaq, and DAX. So, do you mind? Have you looked at Nasdaq recently?
Yeah, I looked at it before actually. I traded it yesterday.
Today? Ah, sorry, okay.
Here it is. No, I didn't specific. I mean, I showed it. I didn't say much because, you know, we're still holding like these previous lows. I see us trading below this important trend line. But what troubles me is that usually when you see like a big trend line, and this was a big trend line. I mean, it was a trend line that was actually supporting the uptrend for quite some time. It had been tested multiple times, and every single time it proved that it is important. But now that we're actually trading below it, the market seems not to care about it. So this troubles me somewhat. I would expect a totally different kind of price action once we saw that. Regardless, with yesterday's candle, we formed an evening star formation in the Nasdaq. So I have to say that despite having closed my small position and took profit yesterday, I have to admit that if I had to do something with it, I would be selling it once again, right? Hesitantly, and I might actually do it now that we've rebounded somewhat. I don't know. I'm going to think about it. It's a quarter of a position, so I might reestablish it. We're going to see. I still see the potential for a bigger breakdown in the Nasdaq. I just don't like the fact that, you know, we haven't accumulated some, momentum. That's what I expected when we actually were breaking this trend line. Now, having to do with the Dow is probably the least interesting of all the indices. I mean, first of all, it's the one that hasn't been pushing to new highs. So, you know, it has been underperforming more or less. And, you know, it's like nearing the all-time highs. It's above this triangle. You know, there's not much to say about it. I would either trade, I think, better patterns to trade in the S&P and the Nasdaq. IWM yesterday had a, you know, quite a bad day, but it has yet to break down even from this previous triangles resistance. Let's see, we might retest it today, confluencing with a 50 DMA as well. So let's first see it break that trend line before we can have a bigger discussion. Definitely, though, it was very, very overbought. It was very, very near a critical confluence of resistances. We didn't actually make it there, but, you know, we came, you know, rather close to that. So, you know, I wouldn't be buying it yet, although the move lower for the time being definitely doesn't have impulsive characteristics. One thing is for sure, if we're talking about indices, as I was showing yesterday and last week, I think that if you have to be long one of the indices, that has to be the Nikkei, because clearly the Nikkei has broken out just recently from an important formation, and it seems to have the required momentum to make you feel comfortable that, you know, this is a technical break that, you know, the market actually trusts at the moment. So thank you all very much. As Blake mentioned, our offer is up until at the end of this month. It's a great opportunity to get, you know, your subscription at a deep discount, and, you know, you're afterwards you're also grandfathered in, so, you know, you can stay on that program forever. So, you know, it's a, you know, you have a few days to grab this offer, but whenever it auto renews, it will do, you know, with existing prices. So that's it for today, and we'll see you all again tomorrow. Thank you, Stelios.
Thank you, Steve. Bye-bye, everybody.